It's my DAX markup, post-session markup for the 28th of August. So at session open, I was thinking, first of all, I was thinking like we could have came up here, or we could have like fallen over from this order block. We ended up going higher. Um, so I just wanted to be careful. Had a position here, took up some longs here. I want to be careful of this high because sometimes like in this range like this, sometimes what price will do is just go directly above, sweep the liquidity, then fall over. So you want to be careful around like when there's like a like 1 hour high or 4 hour high, something like that. You want to be careful of that because price action may just be like, for example, this move here, right? That looks great, but then what if it's just to sweep this liquidity? So you need to be careful of that. So then when we came into this 1 hour order block here. I was waiting for price to come to here, but once you saw like, I was thinking once you see this massive reaction here, like obviously we've just mitigated the white candle here, which the black candle order block, it's still like, I mean, it's not that big of a difference, and it's in alignment with like this like the high of this candle as well. So it's like you could have been looking at that as well. Um, so then on the 1 minute there was when we shifted price, shifted structure here, you could have bought there. You could have bought like off this fair value gap here. So then we came into this order block, then we like shifted like that. When we shifted like that, you could have just market and like look at that. You could have just market entry there. Because then the order flow has shifted, and this structure up here, look at this. Like this is pretty small. So when structure shifts here, this is the same size as like all this. So if this structural shift here is the same size as all of the order flow in this leg, then that means the order flow in this leg, it's probably shifted here, right? Whereas if it was just like if we only shifted like it was like this, like that, but then we were coming into like that, and then we were just coming into here, right? Then you would think maybe this minor order flow shift was just coming in here to do that. But then here, this is why I like this, is then here, this is the same size as like this. So when you see a shift here, you can be certain, oh, okay, maybe we're not going to just come up to here um, and then go lower. So you literally could have just market entered here. I didn't do that because the reason why is because we didn't mitigate here, right? And also I was a little uncertain, so there was this order block here. I was a little bit uncertain, but then price action just blasted through that, which I really liked. So I was like, oh, and this you could have been targeting maybe this like previous high here, or you could have just targeted like 2R like that. That would have been hit. So so when price action was at this point here, we had broken this previous high, but the reason why I still entered is because there was no order block. All the orders blocks here and fair value gaps, so this was all well priced in. And what I mean by well priced in is that price action comes up here again, then this is like, there's no fair value gaps, no order blocks, then this should all get taken relatively easy. It's low resistance liquidity, and that like, I'm viewing it like that, bang bang, to do that. So this is low resistance. So if it's low resistance liquidity, then it was just to mitigate a retracement into some order block here to then go higher. So then it's fine to keep longing, even though we've broken out of this structure, right? Because it's not a significant high. That would be vested interest to keep it protected, right? So even though we had broken here, and price action was here, right? So we had some form of resistance here, massive, when we go up, down, into this order block right here, and I longed on this candle. Then I just had my button on the, I had my hand on the button to sell my position here in regards to this 1 hour liquidity, because there was still, it's like this range, you could be looking at it like this, and sometimes price action will react to the order block of a range, react, come up, then sweep the liquidity, then it'll fall over. So like I'm thinking, I just want to take my position off here because we could just be sweeping to go lower, right? So you have to be careful around um, situations like this. So so what I do when I'm watching interactions of liquidity, what you want to do is just have your hand on like the sell button or buy button, whatever position you're in, and then just get ready to exit it if you start to see a reaction, because you don't know, like I don't know if the price is going to react from this liquidity. Like I try to think the liquidity would be like around here, like I'm thinking like a general range around this area, above significant highs. So I'm not certain if price action will react, but I will react if I see price action start to react. So when you see price action like the candles turning around here, right, it could just be into here, to come into this range to do that. Then with my 1 hour bias, I just took off 90% of my position there once I see the price starting to react to the liquidity, because we may be doing that to sweep that liquidity, then just fall over. Um, so it's just better to take your position off. So that was for 1.56 and 34 points. Yeah, 34 points. Um, so then once price action comes down here, we come into this order block here. My initial position, my risk is off the table. Like I just trail my stop to here, right? So I'll take my risk off the table, and then um, I will keep longing, right? If price action shows me it wants to go higher, then I'll just take me higher. I'll just keep following you. So when price action's here and it comes into this order block, this is like the next range. So at this point we're like here, and we go up and down to this order block. Then we're going higher. And if you see price just keep like open up, big candle there. I didn't enter on that candle. I waited for just a moment, because sometimes price action will like react out of an area, like just react out, just minorly, and then like fall over. So then I just waited for this next candle to open, and once I saw this right there, and it started to go higher, then I just bought there. Is about right there. So then once price action was going higher, I decided to take off my position all the way here at 1.12 for 28 points, because I hadn't seen this. Uh, I wasn't looking at this 1 hour order block here. I didn't mark it up. Here, this one, where price action had this was the previous day's price action, like came down here, then we swept like below this low and reacted to the liquidity, and like so we closed here, and then price action came up, right, into this wick, picked up more supply, then started selling off. So then there was some form of supply here that led to like that continued move to go lower. So when I see that, I'm thinking, okay, maybe price action is going to react from there. And I didn't have that marked out. So then I quickly looked at the 10-minute, and I marked out this order block as well. And then I decided once price action was here, I was like, I'll just take off my position fully here for both. Um, because I'm not sure if price is going to react from this order block. And then at this point, when price action was here, right? If price action does react from this order block and we come down to here into this range, then it's possible it may just fail. So I was like, okay, I'll just rather take my position off. But originally I had my target at 2R up here, which ended up getting hit. You can also, something else you can do as well is like if there's a 10-minute order block or whatever your medium time frame is, then you can go on the 1 minute, 5 minute, whatever, and you can like refine it to like a lower order block. So like this. And then sometimes in a circumstance like this, whereas this 1 hour, there's this 10-minute order block, and then the 1 minute order block in the 10-minute order block. And you see here, like there's like this big like range here, right? Um, with these fair value gaps, usually, sometimes, if there's this extreme order block inside the 10-minute order block and there's these fair value gaps, then usually those fair value gaps will get filled hard and price action will just come to the order block to pick up more orders, um, which is what ended up happening here. We swept above the order block a little bit. Yeah, thank you for listening. Oh, how I could have done, so what I could have done better. I think everything I did today was fine. Just make sure like when you guys are trading, I'm always telling myself this when I'm active trading, like when I'm taking these positions, I'm like I analyze myself like what is my breathing like? Is my breathing calm? Is it fast? Is it getting rapid? Is it slow? What do I feel? Do I feel calm? Do I feel relaxed? Is there any anxiety? Do I feel excited? Um, uh, I'm constantly asking myself like how do I feel? What is my breathing like? And reassuring myself, like just relax, stay calm, right? Put on some music, put on some relaxing, uh, some relaxing music, and just enjoy the process of trading. Like come to the desk every day, and it's fun. Trading is fun, right? So it's enjoyable. It doesn't have to be you shouldn't be coming to your trading desk like bringing any negativity, any negative emotion, negative thought, anything. Like just come to the trading desk, empty your head. Like don't think about anything. Like during the week when you're actively trading, just empty your head. Don't think about your trading at all. And then this is what I do. I completely empty my head. And then on the weekend, like when you're doing your journals, when you're reviewing your journals, then that's when you want to think. Like think, okay, what you know, is my strategy, is it still working? Do I have to change something? What do I have to change? How do I change it? Blah, blah, blah. But you don't want to think that way during the week because then you're messing with like the programming inside your brain during the week when you should be trading. So during the weekend, that's the time to like go into your brain and pick pieces out, put pieces like new in, like okay, I should have done this, and you put that in your head, and you're like, okay, I'm gonna do that next time. You take out, okay, I shouldn't have done this, so I'm gonna take that out. That you do that on the weekend, right? And during the week, just empty your head, and you're fully present. You're in the moment, and you're just flowing. You're just flowing with price. You're watching price. You have your strategy in mind, how you see the market, right? Whatever strategy you're using, but you're also just watching price. Like, what is price doing? How is price reacting from your levels? How is price reacting from the areas you want to buy, the areas you want to sell? Just watching price. Okay, thank you for listening.